Japan's inflation rate in April 2023 was 3.2%, slightly lower than the previous month but still well above the Bank of Japan's 2% target. This was the 12th consecutive month that inflation exceeded the central bank's goal, reflecting the impact of higher energy and food prices, as well as rising domestic demand and labor costs. How does Japan's inflation rate compare to other major economies, and what implications does it have for the global economic recovery and stability? According to the latest data from the International Monetary Fund, IMF, Japan's inflation rate in 2023 is projected to be the highest among the Group of 7, G7, advanced economies, followed by Canada, 2.9%, the United States, 2.8%, Germany, 2.6%, France, 2.4%, Italy, 2.1%, and the United Kingdom, 1.9%. The average inflation rate for the G7 countries is expected to be 2.5%, which is above the IMF's target range of 1.5% to 2% for advanced economies. Japan's high inflation rate poses several challenges for its economy and monetary policy. On one hand, it signals a recovery from years of deflation and stagnant growth, as consumer spending and business activity pick up after the COVID-19 pandemic. On the other hand, it erodes the purchasing power of households and firms, especially those who rely on imported goods and services. It also puts pressure on the BOJ to tighten its ultra-loose monetary policy, which has been supporting the economy with massive asset purchases and negative interest rates since. However, the BOJ faces a dilemma in adjusting its policy stance, as any premature exit from stimulus could derail the fragile recovery and push inflation back below its target. Moreover, higher interest rates could increase the cost of servicing Japan's huge public debt, which is over 250% of its gross domestic product, GDP. Therefore, the BOJ is likely to maintain its accommodative policy for the time being, while closely monitoring the inflation trends and their impact on economic activity and expectations. Japan's inflation dynamics also have implications for the global economy and financial markets, as Japan is one of the world's largest economies and creditors. A sustained rise in Japan's inflation could boost its domestic demand and imports, which would benefit its trading partners and contribute to global growth. It could also increase its demand for foreign assets, which would support global liquidity and asset prices. However, a sudden spike in Japan's inflation could trigger a sharp appreciation of its currency, which would hurt its export competitiveness and weigh on global trade. It could also prompt a sell-off of Japanese government bonds, JGBs, which would raise global bond yields and tighten financial conditions.